Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel and Joel Elconin. Dennis Dick with you this morning on tap. Micron earnings, FedEx earnings, Bitcoin rallying, and the delay in tariffs until G20. Today's guest, Ryan Craver, retail expert. He'll break down the retail sector for us at 8:35. Jumping right into it, Joel, what's the word here in the overnight session?
Oh, big green on the screen. Spoos nice rebound from yesterday's sell-off, up 12 and a quarter, 29.34 and a quarter is your last print. 39 even, your pre-market high. Not much up there, folks. If we take that up, we could be back near the 29.50. That was Friday's close, as well as the intraday high from yesterday. On the downside, we'll look for yesterday's low at 29.20 as support. Mid-range on the session comes in at 29.28 and a quarter. Crude up a stick. Good numbers last night, trading at 58.93, maybe heading for that magic $60 level. Gold finally gives some back, down 10.90 at 1407.90. Silver in the red by 3.3 cents at 15.35. And don't look now, Triple D ups its target in Bitcoin 1 day ahead of the 1,300-point rally in the futures.
Triple D. I did up it yesterday morning. I upped it to the all-time high.
How did you do that?
How did I do that? And then they came and they bought up another $1,300. It's in full rocket ship mode here right now. If you're chasing it now, you are late to the party. I will say that. And I don't think the path is going to be straight rocket ship to all-time highs. I think you're going to have a little vicious pullback in here somewhere. I do believe we're eventually going to all-time highs, though, on Bitcoin. I just don't see anything really bringing it down, in the near term. So I think you're going to have a pullback, just coming back, but I think that pullback's to be bought. So I'm predicting now that we're going to get like another 1,000-point sell-off here somewhere, but maybe even bigger. But at the end of the day, I'm going to look at Bitcoin. I think I'm going to see all-time highs eventually.
Spencer, give us the news.
On Bitcoin, yeah.
Bitcoin?
Stephen Moore, this is actually Joel found this one. Stephen Moore, a former Trump economy advisor, has joined a cryptocurrency project that will apparently try to come up with a new type of central bank that also incorporates cryptocurrencies. I don't know.
Spencer, don't sound so skeptical. This is your generation. I don't know. How you gonna have a central bank with a $21 million flow?
Well, isn't it the entire
Bitcoin?
Isn't the entire point is that there is nobody at the middle? There is no central party, right? Well, everyone is a central party. It's decentralized. That's the point. So I don't know.
I know nothing about the fundamentals of Bitcoin. I'll just say technically this thing's in rocket ship mode here right now. It's been going straight up for the last since 4,000. Since I had that dream that it was going to 4,200 and it broke out, and it's been straight up ever since. It's had little pullbacks in there, but man, straight up, just keeps taking out every important technical level here. Rocket ship mode.
Yeah, this is one of the biggest moves it's had in a while, up 11%. The futures have already traded 10,000. You know what also kind of nicked the bottom in this? And how about the SIBO? Do you think they're just kicking themselves in the butt? They delisted the contract in June. It went off the board in June. And now the Merc is taking all the volume. It's a much bigger contract. It's already traded 10,000 contracts. The institutions waited. If they did get in there, they waited for the big pullback and built a position, and now they're pushing it higher. Let's see here. Traded over 10,000 contracts yesterday, and for the entire day, and it's already traded 10,400. I believe the highest. No, let's see. Yeah, is that right? Yeah, it's traded 10,400 contracts. Unbelievable. But let's go to some of the after hours action, Dennis. And you almost got worked in work, huh?
I did get worked in work to a certain extent, but I shook out of a lot of this. And what happened was, okay, so we came out, give the rating. The rating came out last night. What was it? Bernstein?
Let me find it real quickly. It was an initiation from Baird.
Oh, it's Baird. Okay.
Yeah, outperform rating.
Right.
outperform rating, $44 price target.
Yeah, so that came out, and I bought the thing up. I bought like 25, 31, 32, all the way up, like buying, and I kind of loaded up too much. It went up and kissed 35.60, and I was like, oh, it's going to be a good one. And then it just started pulling back and pulling back, and ends up going red and trades red most of the night. And I'm like, are they going to shrug this off? So anyways, I got nervous because I got too big, and this sometimes happens where you get uncomfortable. It's a wild stock, and it was way bigger than my normal bet size on it. So I'm like, okay, I need to just lighten up just in case something else is going on here. Because obviously, the rating was out there for a few hours at that point in time. And I'm like, it doesn't appear to be responding too much to it. Usually they respond in the morning more than at night. But at the same time, I don't like seeing it go red. I'm thinking maybe there's something else that's out there that I don't know about. So I lightened up and I sold half my position right around scratch. Wish I wouldn't have, because I sold half of it at 35.19 and 35.20. And obviously it's 35.90 this morning. I'm completely out. I've already sold this morning. I just sold 35.90 about an hour ago, and I sold some other. I sold some all in there, 35.80, 35.90, because that feels like it's like that's what it's worth. Kind of is 2%. That's what I thought it was worth originally. So, anyways, this happens sometimes. When you get too big, sometimes just get yourself a little smaller to feel you're a little more comfortable. So I went to bed and slept well because I sold half that position. If I would have held it all, I'd been nervous all night. So, anyways. You got to be comfortable with your bet size.
Let's see. Pre-market high. We are trading right near the highs, except for that initial spike. Dennis mentioned that initial spike to 36.40 is you're using that as a target. As cooler heads have prevailed here in the issue, we are still trading up, finding a little seller here just around 36. We're right near that, and I'll keep an eye on 36.13. That was 36.14. That was the high from yesterday. If you really want to be greedy, or you really want to see a 50% retracement of this, 38.5 would take you back from that $42 high to that 34.81 low. So there's a big old target if you're really bullish slack here on this initiation, and who knows, someone may do the same thing.
It's a
tomorrow.
Positive commentary for a stock. Hasn't had a lot of analyst action here yet, so that's why I thought maybe this could kickstart it. It does appear to be kickstarting it. I got that FIFO problem already out of it, so probably, obviously I even sold some at scratch last night because I was second guessing myself. But it's trading up here. I've booked the gain, but I don't know. It could kickstart it further.
Yeah, who knows? Who knows?
It's a little vote of confidence here. First, like when's the last time I had analyst commentary? It's only been out there 4 days, but in the last, has there been any really yet? Spencer, you could quickly look at the pro to find that.
On Slack?
Yeah,
not that I can think of. And,
yeah, so you get your first positive commentary coming out. I think it kickstarts it a little bit. That's what I was betting last night, and it worked. No pun intended. So, but like I said, I'm already out. First in, first out. But I could see this thing getting on the 36 handle. At least testing yesterday's high, which was 36.14.
Just real quick, too, we were noticing the technical trading in Beyond Meat. Dennis, you made a good point how, boy, this thing likes to double bottom and double top. Of course, you know that you have to take a shot when it's only a single bottom or a single top. Yeah. But, getting a nice rebound here, trading up.
And what Joel's talking about is the 138, last 2 days lows, 138, yep. 138.34. And if you look back to June 19th and 20th, the highs those days, 174.45, 174. So a little double top, little double bottom. I know that the technical analysts out there, they look day to day. They don't want to see that. They want to see an extended double bottom or double top. Me and Joel look like dailies. We're day traders. So if I see an area where it stops and stalls at the previous day's low, that is often a turning point. And it was for Beyond Meat yesterday. We get a little bit of follow through here today. I think about the 50% retracement, 174 of the recent move, 174 to 138. What is that? 30. Holy cow, this thing moves. 30. I can't do the math. It's too early. 36 points.
48
points.
58. Yep. 36.
18 on that takes us right up to where we are. We're hanging around the 50% retracement right now. So 156 to 160. I don't think you're going to see new all-time highs in this. So I think any rally is more of a gift in my opinion. So if I was long this thing, I would be lightening up. That's just me though.
You want to see a perky looking IPO here. Look at JMIA stock hands. Just mentioned it. Big run up off the opening print, the big
Wow.
decline, and now look at that consolidation.
Yeah.
Trading up. Oh boy, oh boy. It's it's trading up 85 cents. I'm not sure if there's any volume associated with that.
No, there's not actually. So
Nothing.
don't get too
Okay.
excited because this is just an odd lot that just traded up. Actually, last night. This is from last night. It was just some odd lot, off exchange odd lot. So that's your retail traders putting market orders and the off exchange market makers just throwing and just printing them at the highest price they possibly can. So, they like to say, oh, this price improvement and stuff, but sometimes they, don't print as nice as they could. Anyways, 26.50 when the best offer is up $1. I guess, if you're willing to pay it, I guess they can sell it there. But anyway, so this is actually still trading flat. So you might have a shot on this yet. It sets up not bad, a little cup and handle. I mean, you get up above the 26.40 high from yesterday, it starts to look a little more interesting. 27.50. I mean, I could see an argument here for trying it.
Yeah, no, I mean, it's been consolidation. Know how long the consolidation is going to be resolved to the upside or downside, but strong market here. It looks good on this one. Let's also just a quick review here of Shopify. Boy, oh boy, oh boy.
Did we call this or did we call this? How I screwed up this trade is beyond me.
Beyond meat?
Beyond me. I never even thought of that before. Beyond meat. Anyways, the thing fell another $20 yesterday. Double downgrade has taken it down. We said 2 days ago on the show when it was 324 that it wanted a catalyst to go down. It got it with the downgrade. The first day out, the first downgrade falls to 311, gets a follow-through downgrade. That takes her down to 281. So it was just too much, too fast. It wanted an excuse to take some profits. Those 2 downgrades in a row gave you that excuse. So it would have been a nice trade to short. I actually put it on, somehow shook out of it, which I wish I wouldn't have. But anyways, congratulations to those who made money on it. We made a good call. I messed up the trade, though.
Real quick for Brian D. Whoever's been hanging in that Western Digital, leaning on the lows of the move, perhaps some institutional buying there, but that's a good segue into the to the Micron earnings here.
Huge. Chips are hot.
Micron had earnings after the bell yesterday. A lot of headlines here. Essentially, they beat nicely on their Q3 EPS. They also beat on the sales, and they said on the call that they had resumed shipments to Huawei, and they provided some guidance, some good guidance as well. So that's the headline. Good report. Q3 EPS $1.05 versus 83 cents. Sales 4.78 versus 4.77 billion dollars. Like I said, the Huawei shipment resumptions is a big headline, and on the call, the guidance that they gave. EPS for fourth quarter, 38 cents to 52 cents. That's the range that they provided. Sales guidance, 4.3 to 4.7 billion dollars. They also said if not for that Huawei ban, they would have hit the high end of their guidance estimate.
I mean, the stocks, makes money. We know that. It's been a value trap forever. I've been in it in the long-term portfolio, and it's been a big mistake. It still is in a serious downtrend. So it's hard to just say, okay, that's the bottom. Let's just load up Micron here. I mean, it's good that it held the November lows. We've come back down significantly since then. It's good that it had a nice earnings report, but it's just hard to really get excited about this stock because it seems like no matter how much money they make, it's never enough. And it seems like whenever it gets a nice rally, it's always a selling opportunity. So could this sustain a rally for a few days? Sure. You got overhead supply. 36 is a big level for it. That was the high back on June 11th, my birthday, 35.99. So that's the level that I would say if I was playing from the short side, I wouldn't want to see a trade above that. But 36, I think maybe that's going to put a lid on it. We'll see what it does there.
Oh, Dennis, you took the words right out of my mouth here. Look at this. But this is, Spencer, you got the 15-minute chart up here because I think this is a very, very important point here. The initial surge off the number, right? You take it to 36.15. Then you got a considerable sell-off. You made another shot at it, and you stall at 36.13. And now you're back on that. Spencer, switch over to the dailies. You see a daily top here at 35.99. Big seller. Big seller there, 36, 36, 13. They clean them up. Greener skies ahead. You're wide open there, maybe closer to 38. But man, oh man, you got a pre-market high, after hours high, coinciding with a daily high. So big level. God, I like to see this, for the Micron bulls out there. I like to see it open, run up, hold 36, and then just blow through that pre-market high. But right now,
36 is huge. A
Yeah,
stock is in a serious downtrend.
True.
If I had this on for a trade, I'd be selling it. I have it on for a long-term investment, so I'm probably sticking with it. But it's been an awful long-term investment.
Okay, let's go. There's some good
All
stocks.
the other chips are moving. They're
Yep.
all hot. I mean, off this Micron news here, you can look at AMD, you can look at NVIDIA, you can look at Intel getting a huge pop here as well. You can jump into just look at the SMH, and SMH is up trading up 2.3%. But even going into stocks like Texas Instruments, going into Applied Materials, LRCX. I mean, the list goes on and on. If you were a chip, you were getting a rip from the Micron earnings.
All right, let's see if Micron will be your leader in that today. BlackBerry had a couple nice pops overnight. I think, did I write them down for earnings, or was
Yes,
there?
they did.
Yes, they had earnings. They made a cent last quarter, 1 cent per share. The estimate was 0 cents, so they
that's a huge beat.
Beat that by a penny. Sales of 267 versus 264 million dollars. I don't know if they gave any guidance, but that's a beat and a beat for BB.
I traded last night ahead of the report. I didn't hold it into the report though, so I actually was selling it when it was popping up last night after hours. I don't know. I mean, I don't know what to say about this thing. I mean, I like trading these things ahead of the report sometimes, but this is, it could go anywhere really. I mean, these things, we have seen some wild moves on BlackBerry before. It looks like it's doing nothing in the pre-market, but it's still early, so maybe it could show some life, maybe it doesn't. I don't know. I'm honestly don't have no opinion on this at all.
Okay, I don't have much either. Couple spikes towards $9, so I'll just give you that. That's 70 or 65 cents away. Just $9. It hit 9, and so far it's peeled back from that. On the daily charts, you did have a high at 909. So if you go into rocket ship mode, see what happens at $9. On the downside, on the dailies here, if you want to stay green, you're up a nickel. Yesterday's low, 826. Another low is at 820. So if you want to take a shot off the open, you can use a tight leash here. Really needs it to stay green on the session.
Other earnings, FedEx last night. I own this one in my long-term portfolio too. Do I own everything in my long-term portfolio?
You do. Do you have the S&P 500?
You are. No, this is what I've been saying. Dennis is a closet indexer.
Oh yeah,
he's
an
indexer.
Closet indexer. I'm full on like I'm indexed. I own so many stocks that I am the index.
You are the index.
I just buy the index.
And I only focus on the ones that I'm losing on because I'm always a glass half empty guy, so I like to complain.
All right. Well, FedEx earnings yesterday after the bell. Q4 adjusted EPS $5.01 versus a $4.93 estimate. Sales missed 17.8 for $17.88 billion. So mixed on the Q4 numbers. EPS beat, sales miss. The fiscal year 20 EPS guidance that they gave was going to be down in the mid-single-digit % range.
It chopped around a lot on the earnings report. The earnings report is not great, but expectations were so epically low for this that it's actually rallying on not great results. That's my opinion. 155.98, it's trading up to 159. I mean, you can look at yesterday's high, first of all, at 160. That's the first line in the sand. That's all I've got.
Yeah, big line in the sand there, because after 160, your next daily high comes in at 164.98. So there's a $5 vacuum there, with only Monday's close at 160.90 in its way. Trading up 352. What do we do? The initial spike took it to 160, 150, but I would concentrate on this getting through yesterday's high. 3 big red candles going into the report. So we'll see if some people want to get their money back in this one. But not overall, like you said, Dennis, not a great looking chart. So I'm looking to follow through.
I mean, it's a value. Again, this is Micron part 2. The things trade 10 times earnings. I mean, is it a value trap? It's definitely been a value trap. So, I'm up in this thing because I bought it at a perfect time back at the beginning of the year, but I gave back most of the gains. So I don't know. It's another one I've been very disappointed with.
Just before we move on too quickly to the other earnings or ratings, Roku got taken out to the woodshed yesterday too, and is continuing lower. This one, I believe.
What's the deal with Roku today? Why down? Do we know? Is there any?
You know what? There were headlines yesterday.
I mean, it's down. It's down when everything else is up. So
regarding their tariff exposure, because a lot of Roku's are like they're built into the smart TVs, so it's as far as hardware is concerned.
This trade down $90 last night. We're hitting it hard. It's rallied somewhat back with the overall market here, but relative strength obviously very poor here today. The candle yesterday was absolutely awful. I think it sets up to go down more.
Yeah, and let's see. I mean, it's got to go green. 93 and a quarter was the
struggle to go green. After last night's trading action, I mean, sometimes the after-hours action is such a tell too. I mean, they were hitting this thing in the hand over fist last night, down to $90. So somebody's really nervous. That often follows through to the regular session the next day. So you're getting a rally here, and you say, "Oh yeah, I bought it at 90. I'm doing pretty good, 91.70." But the market rallied significantly since then. So really, it's rallying just because the overall market's not rallying because they love Roku all of a sudden. We talked about this 2 days ago too, breaking down through 100. And it was straight down yesterday. So we got this one right too. I don't know if it's done breaking down yet.
It's had a huge rally. You mentioned last night that they smacked it down pretty good to $90 even. You're filling the gap that you had there. 90 should be interesting because number one, it's the pre-market low. Your May 31st low was 90.0. I see 3 lows at 90 and change. After in that, we're looking at 88.92. I mean, it's had some lows in this area. So don't be real surprised it goes through 90 and then hits a few stops there and potential rebound. If you really want a nice target for this one, the next pair of daily lows under 90 that coincide are coming at 86.50. So SPOO's rolling over a little bit.
Yeah,
here.
I was gonna talk about that. FYI, if you see movement in the SPOOs, Trump is currently on with Maria Bartiromo on Fox Business. So that is
we
why.
got the Trumpster. Gonna talk a little bit again.
So what time is he coming on our show?
Can we get Trump lined up? I got a few questions for Donald Trump.
Well, the issue is when the press secretary resigns and this turnover, my emails get lost in translation. So I need to email the new press sec and get that worked out. Sarah Huckabee Sanders, left the job before responding to my email, so can only do so much. But
we need to get Bernie Sanders on the show too, because I got a few things to say to him about this trading tax.
Oh, I bet you do. Okay.
All right. And they're not nice words. We might have to actually be okay. Anyways.
Now, Dennis.
All right. Last one.
All Canadians are nice, Dennis.
We're all nice. We're nice. I'll say it in a nice way. I'll say you're being ridiculous in the nicest way I can possibly say it. Okay.
All right. General Mills. This morning reporting Q4 adjusted EPS 83 cents versus 76-cent estimate. Sales 4.16 versus 4.25 billion. So EPS beat, sales miss for GIS.
Been straight. I mean, these food stock rallies are ridiculous. I mean, in my honest opinion, General Mills at the beginning of the year was $36. It's 54 now. Time to sell. I mean, if you get any pop in this thing and you're holding it through the report, hoping for more. I mean, Kellogg's is in the gutter, so it, hasn't really participated. We know KHC is in the gutter. Campbell's kind of just been hanging out. What's with General Mills? Why did it rally that much? So expectations way too high probably for this because it's been the only one that's really been ripping. I mean, I guess you could say Hershey's has really done well too, but all these rallies, in the food stocks, any food stock that's rallying, I'm a seller of all food stock rallies.
Let's see. This is a big move for it. So, like, my first instinct would be to fade it a little bit, but then you look at the monster rally that it's had. 50.06 is your pre-market low. A couple lows right in that area. Really not much there. I don't know. I'll use that pre-market low as a target. We're 70 cents above it. After that, your next pair of daily lows that double bottom comes in at 48.30. But I don't know. This is a big move for General Mills. If you were sitting on a short for the last month and a half, getting a big windfall here, really out of the norm for the stock. But it has big moves off earnings report. So holds 50, chance of rebound. If not, I'm looking at 48.5.
Next.
Well, as far as the earnings parade, that was pretty much it. GIS, FedEx, Micron. There was a couple of BlackBerry. There were a couple others like Paychex, but I don't know if we're particularly interested in that. I want to talk about Netflix here because
Sure.
I was surprised Netflix was trading up this morning. Turns out they did have some commentary from Goldman. I guess the Goldman analysts met with some leadership at Netflix and the CFO to be specific, and they're maintaining their rating. They're keeping Netflix on their conviction buy list. Price target is $460. The reason I'm interested in Netflix this morning is because of the headline yesterday or last night that they're losing their number one show, The Office, in 2021. It is the most watched show on Netflix by a mile.
Why are they losing that?
Because NBC, which owns the rights, is moving it to their streaming service that they're going to launch.
Is this going to happen with
Yes.
Netflix, that they're going to lose all their content eventually because everybody's coming
Well-
out with their own streaming services?
Well, not all their content, but
Obviously that was an exaggeration. But
Yeah.
I mean, are they going to continue to lose content? Because, we know Disney's going to pull all their content.
Yeah.
Now you're seeing NBC do it. I mean, why is this not going to happen? I mean, this is a serious issue.
It could be, yeah, and we don't know the full extent of it yet because Netflix, they don't get these shows for free; they pay. So
Yeah.
I guess it's a question of who's the highest bidder. But the price of these shows is going to go up as you get 6, 7, 8, 9, streaming providers out there.
Yeah, this is it's not a good headline. I mean, that they're going to continue. It looks like to lose shows in the long term. And I mean, it was down yesterday. $10 here. It's getting a little relief pop on the positive Goldman commentary here, but stock's been in a trading range. I mean, think about how much the market has rallied, really in the course of last month. Yes, it's participated, but it gave back a lot yesterday. And it really, hasn't taken off. Some stocks making new highs. This one is not. I'd say, guilty until proven innocent. Until this can start getting up over 390 again, I think rallies to be sold, Netflix.
Yeah, kind of in the middle of no man's land here because you took out that, went through that 360 handle like a hot knife through butter. So I'll just give you one target on the upside, pre-market high at 364.98, call it 365. But to really impress me, this thing would get up over 370 and take out 370. But I just don't see it just taking back that entire candle from yesterday. So scaling out on this one, I think, would be the best one if you're trying to get long or trying to get out of a long. See where they take your offers. And when they stop taking your offers, then you better start hitting bids.
And Jay in the YouTube chat noting that the head of international movie acquisition of Netflix is moving over to Disney Plus. What about AbbVie here? After yesterday, AbbVie is, I believe, like the 5th worst performing large cap stock.
Well, that was just an absolute disaster. I mean, there's no other way to even say it. The stock. So I'm long both stocks. I get one taken over, and I almost don't make money because AbbVie falls like 2/3 of what AGN went up. I cannot believe they hit AbbVie that hard. They're going to hit it. But I can't believe they hit it as hard as they did. That's incredible. I mean, the stock's it's now a 6.4% dividend payer. I mean, I don't know. Like long term here, I think about yes, maybe they got a problem because it's one drug that they're really dependent on. That so the one main drug which the patent comes off 2022 or whatever. So obviously they're thinking ahead maybe with this AGN purchase, but I'm absolutely shocked they hit it that hard. The dividend yield is 6.4% on this now. At a certain point in time, I think it's a buy. I'm on it. I'm already on it. I mean, I've owned it since birth, so I'm probably sticking with it. Like I said, I own it jokingly. I say that since birth because I've owned it since the Abbott Labs spinoff. I owned Abbott Labs before that, so I've owned it forever. I owned it since 2012. I got those shares, obviously spun off to me, and I've watched it go to $125. Now I see it's basically cut in half from its all-time high. Really close, anyways, at 65. 6.4% dividend. I pretty think that's safe. At least for the next couple of years. So at a certain point in time, maybe wait till it stops going down.
There you go.
So, maybe we lean on the 65 low, maybe put in a double bottom. But I think long term, I think it's a good buy here, in my opinion.
Yeah, look at it got an upgrade from somebody today, right, Spencer? Did you? I thought I saw that. I'm not sure if it was a big firm or not. But you want it to stay green, up $1.20 here at 60 or $1.50 at 67.20. Really not much there at 65.06. Let's see if we got anything on the monthlies. Yeah, you got a little bit. You got 64.61 was your May of 2017 low. So see if the institutions, back up the truck here and start to support it at $65. Getting a little pop, but really, look on this one. If you go to the monthlies here, Dennis, you've been keeping an eye on the monthlies here. When this took out like 77, it was kind of time to hit the exit because it had held up that 3 or 4 months in a row. And then it broke down. So
yeah, but you can look at a chart, whatever you want to look at a chart.
Afterwards,
the stock fell 20% yesterday, or 18 or whatever. It fell 15% because they paid a lot for Allergan. I mean, nobody knew that was coming. That one, you can tell by the chart. So, fundamental news will knock a stock down every single time. I don't care what the chart looks like. So, and also telling somebody, a long-term investor, that they should be selling because it's breached a technical level. I mean, you got to have your time frame in your mind. If you're in it for a trade, sure. But I've been in this thing since the last 6 years since it came out, and Abbott Labs I've owned for a decade. So and it was part of Abbott Labs before. So to come and just sell, and this is what I'm going to say. This is my rant. But my absolutely best positions in my long-term portfolios are the ones I never traded out of. And you will always have an excuse. You will always be breaching some technical level. I mean, there's always going to be cases, and you're holding a stock for 20 years. There's going to be multiple cases where it looks like it's breaking down and it's going to break down. Like MasterCard even. You can look at that and say, this is my best example because it's been one of my best holds. I've owned this stock since $11. I mean, you could say, okay, well, it's stalling out here. It's starting to look weak at 60, at 80. It's $261. So have your time frame in mind. If you're investing for the long term, buy good companies and don't trade them. That's what I say. And I mess this up all the time. I end up trading my long-term portfolio, and it's a big mistake. I'd be way better off if I never traded my long-term portfolio. I sold PayPal $40. I thought it was going to break down. Well, that was a big mistake. $114 here now. So have your time frames in mind. But if you are really Warren Buffett approach, long-term investing, the only time you really should be selling stocks is when you are not a believer in the fundamental story anymore. When the fundamentals are broken. In the case of like a GameStop, the fundamentals are broken. So that's a different story. Are the fundamentals broken, on a stock like MasterCard? Hell no. Are they broken, on a stock like AbbVie? I don't think so. I mean, they've only got the one stock, but I don't think it's completely broken. So, I mean, that's what you got to analyze. Put your trading hat on. If you're a trader, stock starts breaking down, get out. If you're a long-term investor, sometimes you've got to hold through a lot of pain.
Speaking of longer term investing, Anne-Marie Band just popped in the pre-market prep chat, and her weekly level to fade sharply is if it fails to hold 330. Boom, boom. She's looking for 260 here. So you're talking about time frames. Anne-Marie's giving us a longer term time frame. I see the trading range. That in the bottom of that area that she's talking about, but 8:35. You want to talk some retail stock, Spencer?
Let's do it. Let's bring on today's guest, Ryan Craver. He is a retail expert, founder of Commerce Canal. Ryan, let me make sure he can hear me. Okay. Up and Ryan, are you there? Can you hear me? I don't know if here we go. Ryan, you there?
Yep, I'm here. Good morning.
Good morning. How's it going?
Doing well. How you doing?
Good. You're a smidge on the quiet side, but we can still hear you. Brian, I want to jump right into it here. before we get to the great chart you sent over, is there any teeth to the walkout today, the employee walkout happening at a Wayfair over the fact that they supplied furniture to these facilities down by the border? Is any impact there for investors longer term or no?
I don't think longer term. I actually think it's a good reason to pick them up. I mean, if you look at the retailers that have the belief and the conviction of their shareholder base, Wayfair is definitely one of them. So I think longer term, Wayfair is going to do a tremendous job to exploit their offering versus Amazon. I think they're one of the clear companies that will stick around. They've also started to get into the services business, so they're selling ads on their site now. So I think it's a good reason to pick it up on the weakness.
Ryan, just want to break things down here, and because when you talk about retail, you could talk in a couple of different tranches here. Could you break it down to traditional retail, the e-commerce guys, the direct consumer platforms, and then the subscription services here? I know I threw a lot at you there, but how do you break these down? Because retail's just not retail.
Right. Well said. I think if you think of traditional retail, you've got the companies that we all are familiar with. So the department stores who have struggled, as we've seen for the past several years. You've got the off-price guys who a lot of them are currently up against historic highs. So Ross, TJ Maxx, Burlington, those types of guys. And then within that tranche, you've got the big box. So Target, Walmart, the mass retailers. Second part of the business is all the platforms that are enabling this direct-to-consumer play. So Shopify is the big name. We saw some pretty big weakness from them yesterday. You've got some other guys like Farfetch who are on the higher end or the higher tier of retail. Subscription, you got the Stitch Fixes of the world. And then that last group of players is the online players. So the Wayfair, like we just talked about, and of course, Amazon. Beyond that, the only group that we really pay a lot of attention to is anyone who we're paying to talk about the retail offering that we have. So, the companies like the Googles, the Facebooks, the Snaps, and even some of the more recent guys like Trade Desk, or even like a Roku.
All right, so let's as you break those down here, the advertisers are going to advertise, the other ones are separate. I guess at this point, the e-commerce guys have been the clear winners. Is that direction things will continue to go? S&P's fading here, folks. We're still green, but we're fading here. I think it was the durable good orders that the market didn't like. Mid-range on the session comes in at 28.5. Sorry about that, Ryan. Were you still favoring the e-commerce guys?
Yeah, definitely. It's an e-commerce world, and it's a trend that we don't see any slowing in. If you look at the latest census data, they were the only ones in the double-digit growth year over year consistently for the past several months. We're still big believers in Amazon, even though there's a lot of chatter about them being broken up. We do believe in Wayfair, like I said before. If we look at traditional retail, it's an off-price world. So off-price is the only place that people are currently playing in. Burlington, Ross, TJ Maxx, those are the guys that we're going to see continued spend and wallet share go to. We do believe that if you're going to play in the big box retail, Costco has the best moat. So they've got that membership base that we think will keep them doing well and will keep their comp sales well above the 5% range.
All right, Ryan.
Go ahead.
Well, I'm sorry, I thought you were finished there. I was gonna ask you about the chart you sent over as I bring it up on the screen, because I do want to get to this. There's some good information on this chart, so I'm bringing it up now. So what this chart shows, every bar on this chart is same store sales growth. Is that correct?
Correct. Absolutely.
Okay, so what we're looking at is same store sales growth going back, what do you want to call it, 2 years here? Going back 2 years for each company. Is that about right?
Yep.
That looks like it's about right. So break down this chart for us. Obviously, we can see Costco same store sales growth at a at an excellent rate. Saks Fifth Avenue, JCPenney, Kohl's, Macy's, not so much there. So break down this chart for us.
Absolutely. So if you focus from left to right, on the left-hand side, the blue bars, that is what's called the off-price group. As you can see, they've, for the most part, been very, very positive, except for a small slip from Nordstrom Rack more recently and TJ Maxx. These are the guys that are buying the lower priced goods from the wholesalers and the licensees, and then showing traditionally a 30 to 40% discount to full price goods. So it's very evident if you show this chart as it is, that they have seen positive comp store sales growth for several years. If you're going to focus specifically on which one is the top performer, it really is TJ Maxx. They are the largest of those five right there, and they can continue to do a very, very good job. Moving right, the dollar stores, which includes Dollar Tree, Dollar General, Family Dollar, those guys have also had a very, very strong several years. So they continue to see positive comp store sales, and they continue to gain market share. So as the consumer has shifted down in what they're purchasing, majority of that share has moved to the dollar stores and the off-price group. And then you look at department stores. We used to have Sears on here, but it kind of messed up the entire scale of the chart. But it's just been a tough several years. I mean, yes, Saks is the one positive there, but Saks is very small relative to the others. JCPenney, I wouldn't touch. Macy's, I think it's really just trading on their perceived real estate. Dillard's, it's been a tough run, and Nordstrom had a atrocious quarter in the most recent run. Moving further right, you've got the warehouse guys. Like I said, Costco, big believer. I think Target and Walmart, they will continue to do well, but I would argue that probably Walmart has seen quite a run. I'm not sure how much further they could go given the pressures that they do have upcoming. But
Ryan, generally speaking, how seasonal of a metric is same store sales?
Yeah, so you're going to see for the majority of the guys on this chart, they're going to have roughly 60% of their sales, maybe even 65% of their sales in Q3, Q4. So obviously it's a percentage change versus the previous year. So if you've got a 5 or a 6 comp in Q3 or Q4, you're performing at a much better rate. Because it's a larger portion of your sales.
All right, actually, but what I meant to ask is how seasonal is the same-store sales growth? If that's a slightly different take on that question, but do you see same-store sales tend to grow more in Q1, Q2 because it's a lower bar to clear, or Q3, Q4 when it's a higher bar to clear?
Yeah, good question. So Q1, you're going to see your largest growth if they're performing well and they're stealing more market share. It's harder to perform better in Q3 and Q4, just given larger numbers.
Ryan, what about, I'm sorry, Spencer, did you want to follow?
Nope, go ahead.
Are any of these stocks like Macy's? I know you talk about Macy's and their real estate. Target's been doing okay, but like some of these more that are like in the gutter.
Yeah.
Is there any chance of these stocks getting taken out by somebody, by an Amazon or by someone big? And if so, are there any, are they just going to let these stocks just go the JCPenney way? Or eventually, is it going to, their cash flow or their real estate or their brand or something? Is there eventually a point where, these are all of these stocks could be attractive takeout candidates?
Yeah, I think it's a very interesting question. I think if you would ask me this question about a year ago, I would have said, yeah, I could see how maybe Kohl's would be attractive to an Amazon because, they're now allowing you to return all your goods to Amazon via a Kohl's store. They were trading attractively then, but I think, these guys just continue to go down and down and down and perform worse and worse and worse. So what's the rush for an Amazon to acquire one of them, at this point? I think JCPenney, there's no attractiveness at all to anyone. I think Kohl's is attractive because it's got a lot of exposure to non-mall locations. So the strip mall locations, which are a little bit more attractive too in Amazon. I think Macy's has some attractive real estate, but that's about it. I think Nordstrom needs to pick itself up off the ground. But if you remember, they tried to go private, buying it out at $50 a share. They're now well below that. So, to answer your question candidly, I don't think there's any attraction right now because, it looks like it's going to get worse. There's nothing good here in that department store space for anyone to acquire at this point in time, unless they see them go down further.
Overall, do you think that the takeout of Whole Foods for Amazon, do you think overall it's been a plus or a negative for the company?
I do think it's been a plus, and the reason why is because if you look at our wallets, in our purses, we spend the most on groceries. Amazon has been trying to get into groceries very, very hard through Prime Fresh, Prime Now, you name it, and they never were able to bridge the gap without the brick and mortar stores. So I think overall it's a plus, and I think it's going to give them considerable legs into grocery for a long, long time.
Ryan, early predictions here for Amazon Prime Day, or I guess Prime Days because it's 2 days now.
Yeah. So I think what's interesting about Prime Day, because, we have a number of brands in which we'll be running in this. The first thing is yes, it's extended. I would arguably call July Prime Month because they are starting non-Prime Day promotions well before the Prime Days. So I think they've really extended it into more of a month than just a couple of days. The second thing to understand is historically they haven't charged brands to play in Prime Day nearly as much as they're charging them now. So I think it's going to be accretive to their overall margins within the retail space. I think it's going to be another huge couple of days for them / weeks. It's Christmas in July. So everyone's very happy about it because it comes right before they move into Q4 and they can clear some of the seasonal goods from previous seasons or get ready for Q4.
And I got one more for you. I don't know if Spencer's got any more. How about Stomp or Stamps.com? I know you took a stab at that one after the big gap down, and then it just had another gap down here. Is there any hope for this company?
You tend to always bring my losers up. You never point out that I've been talking about Shopify since it was a baby.
That's just part. I mean, we all got losers, Ryan.
No. I totally got this one wrong. Totally got this one wrong. We're a huge customer of theirs, so they are fueling all of these e-commerce packages that you guys are seeing. Granted, I didn't realize how lucrative their USPS contract was. I didn't realize that they were going to, clean house completely. I got this one wrong. With that said, longer term, if they are really doing what they're doing by resetting your ability to purchase any and all shipping providers, and we've got Amazon coming in now, we've got everyone, raising rates from FedEx to UPS to a very strong e-commerce market. I can't say that, it's a great buy at 40, but longer term, it's definitely got the right setup for a company who's trying to be part of the e-commerce growth.
And Ryan, since you brought up last one, Shopify, you're right. You have been mentioning this on our show for a while. It's been ripping beyond belief here. Is this one too hot to chase?
Yeah, it's a tough one. I don't really know how to answer. I mean, if you look at the run from December, incredible. The last 3 days has been just brutal. What I will say is what they announced at their latest get together, Shopify Unite, is very, very interesting. So if you think about mom and pops who are selling on Amazon or eBay and all these other sites, the big difference between eBay and Amazon was that Amazon came out with their own warehouses to ship the product for you. Shopify just announced the exact same thing. I think as they see the growth slow, this is the catalyst to continue the growth. With that said, at a forward PE of 300, I don't know, man. I would maybe wait for some stabilization, see if it trades sideways for a while. But it is the Goliath in e-commerce right now, and they will be there for the considerable future.
All right, Ryan Craver is retail expert and the founder of Commerce Canal. Ryan, thanks so much for the time, as always, and have a good one.
Thank you very much. Have a great week, guys.
Thanks, Ryan.
All right. I was listening to Ryan and listening to Trump in the background. I think Maria has been trying to get him off the screen for like 15 minutes now. I don't know how many times, but there's a lot of
single-handedly brought the S&Ps down and a lot of stocks within the S&P down. Commentary was a big one here. Social media companies should be sued. As soon as he started saying stuff like that, Facebook gave back all of its gains. It's gone red. It has bounced from the lows. Twitter has gone red. Google has gone red. Snap is trying to hold on. It's still trading up a little bit here. These stocks were up significantly before Trump started commenting. Obviously, his comments, very strong statements. Social media companies should be sued, coming from the president. Spooks a few investors out there this morning.
Like, there's like 30 headlines that came out of this interview.
Yeah,
and you know, though, we all know none of them really mean anything because he likes to talk.
Twitter is blocking people from following him. What does that mean?
I don't know.
I'm seeing this
I don't know.
go by, and I wasn't.
When you see headlines like it's possible he could reach a deal with Xi at G20, well, yeah, of course it's possible. It's also possible we couldn't reach a deal. You know what I mean? Like, I don't know.
So he says U.S. should sue Google and Facebook, and that Twitter is also making it hard for people to follow him. What? Does he thinks like people are like Twitter is intentionally blocking people from following him? Is this for real? Does he really think that?
I don't know.
Do you think Twitter is blocking people? Do you think Twitter is blocking people from following Trump? Like intentionally stop?
I think they're blocking people from following me. How else do you explain I only have 500 followers? At this point, it's obvious.
Maybe they're blocking people from following me too. Maybe I should have a million followers. Holy cow! This is the rambling, and obviously.
How do you trade this market?
Stocks. He moves stocks. He's moving them this morning.
How do you trade this when he's moving the market left and right over the past 20 minutes?
He single-handedly just 4 points off the price of Facebook. It was 192 this. Where was Facebook, Joel, when it started? The Facebook pre-market chart.
Okay, I don't know what time did he start ranting.
Half hour ago.
How
long ago, Spencer?
Oh man, I'll just say the top of the last 15-minute candle was 191.
Yeah, but let's even look. That was the recent one after he started suing him. But even going back, okay, sure.
He's been on TV, I think, since like 8:20.
So in 191, so he has knocked 3 points off the price of Facebook. That's him. That red candle, you can just so he could sign that red candle, give his autograph right on that red candle, because that's all Trump. I mean, I don't know what to say. I mean, it's hard. You got to be paying attention when he's talking, because he starts talking bad about one of your stocks, he's gonna go down. Yeah, Google too. Google, bring up Google. Same thing. Google's trading higher this morning. Not anymore.
There's
where's the candle?
There it is, and Twitter too. Dennis, just as you were scolding me for talking about a monthly chart on something, ain't no chart gonna give you that. There's nothing you're gonna.
They knocked 10 points off the price of Google. 10 points. And you gotta pay attention. It moves. It moves. It's crazy how much he moves stocks. It's crazy, that I'm just gonna stop commenting.
Yeah, let's move on.
Bottom line is he moves stocks.
Yep.
They're moving this morning off his negative commentary.
And we moved up off Mnuchin's positive commentary.
Yeah, that's all manipulated. Everything just moves around by everybody's comments. So whatever. I mean, this is a headline-driven market. Headline algos feasting off of anybody who's trading. Obviously, they're listening to the Trump commentary and parsing it and trading off of it. Headline algos feasting off that.
In the immortal words of Jim Cramer, this is a different kind of market. This is a different kind of
market. We've been in a headline market for the last 2 months. Since the China stuff started 2 months ago, we have been in a Trump headline market. There is nobody more influential than Trump. his Twitter account. Like I said, I have a dedicated, and obviously I'm on a cottage, so I can't dedicate a screen here. But when I'm in Windsor, I have a dedicated screen to the Trump Twitter feed. One screen, Trump's Twitter, auto refreshing, making sure, that I don't miss anything. I read a lot of Trump tweets. 99% of them are not going to be market moving, but you can't miss that 1% because when he tweets something and it's about China and it's about a trade deal, it will move the overall market.
We did just, if you're looking at overall at the S&Ps here, we came down at the top of the show. I talked about if we came down to mid-range on the session, which is 28 and a quarter. We wiggled a little bit through that, so I'm just going to use that as my bogey for the day. We hold this 29, 28 and a quarter off the hop. Boom, maybe run back up, do some work in the 29.30 handle. If, in fact, we cannot hold this mid-range session, maybe go down and test yesterday's low. So overall, pretty technical here. A lot of movement overnight. Pretty bad. Dennis, you talk about the bad, red candles, big red candles. Yeah. Yesterday was a pretty big red candle in the S&Ps here. So
it was an ugly day. We needed some profit taking. And you know what? We started rolling over with some of the Momo names and it just continued. And obviously we're still seeing rotation. There's still a lot of names that are holding up very well. And I still think, this is more of a profit taking thing, not the sell off here. But we got back up to the highs we were in May. It was predictable that there's probably going to be a few people that say, hey, I got all my losses back from May and 3 weeks in June. Why not book some of those profits? Or why not at least, lighten up? If I want to lighten up in May and I didn't get a chance to, they sure as heck are giving you a chance in June.
Yeah, and also the we had the quad witch a little over a week ago. So a lot of times, that marks turning points in the market. We were all hoping that the turning point was new highs of the move and 3,000 on the S&P. So right now, I'm keeping an eye on longer term here, 29.60. That's been the high close of the move. I'll put more emphasis on that than I will the all-time high, I believe, was 69 and a quarter here. Spencer, you want to rip through ratings here and any other relevant news?
Sure. There aren't that many of note this morning. I see a couple small ones. As far as the most interesting names, Raymond James downgrading Holly Energy HEP to underperform this morning. Also downgrading Kinder Morgan to neutral and Genesis GEL to neutral. Stiefel downgrading Rollins to sell ROL. That's kind of it. There aren't too many of note.
We talked about the work rating from Bernstein.
We talked about the initiation there on Slack. Any other initiations that I see? There are a bunch, but there are a lot of them are smaller. They're a smaller stock or smaller firm.
Yeah, I agree. It wasn't a big ratings day.
So the one thing I want to add, though, speaking of a headline-driven market, don't forget, tonight is night one of the first Democratic primary debate. Now, I would imagine it's going to go on after the market closes at 8 p.m. for real. But yeah, it starts at 9. So
who do you think is going to be the candidate?
It doesn't. Well, I'm just saying for tomorrow morning, there will be headlines that come tonight that could be there tomorrow morning when you wake up at 4 a.m., 5 a.m., whatever it is to trade. So think about that tonight and tomorrow. It's a 2-part debate, 2 days. There's so many candidates. So think about that.
How many candidates are on the list for tonight?
Yeah, it's 10 and 10.
10 and 10.
Yeah, so don't forget about that as you wake up tomorrow morning for your trading, because there could have been, God knows what they'll say tonight, but you never know. So it could be something to keep an eye on tomorrow. And that's my warning for tonight or tomorrow. Guys, any other last words?
No, like I said, just look at us to hold 28 and a quarter here, mid-range. The dip was a little bit below that. Not much. I mean, we start ripping in this 29.30 handle. I just can't really see anything. I have no significant numbers. Your weekly swing number is 29.36 and a quarter. We've already traded through that, so it loses significance. Big target on the upside. If you're looking for this market to rebound, go right back up to all-time highs. First task at hand, take out that pre-market high at 29.39.
All right, that'll be it for our show. Thanks to Ryan Craver. Thanks to all of you in our chats on YouTube and premarket.benzinga.com. Catch our podcast on iTunes, SoundCloud, Stitcher, TuneIn, and Google. Please remember all the information on our show is for informational purposes only, not meant to be investing advice. Everyone have a good rest of your day. We will see you on Thursday.